Hello everyone, my name is Kaseem. Welcome to the channel. Welcome to the $1 Million Challenge. This is the channel where we trying to get our money up to the first million. I'm showing you my process to getting my money, my investment money, all the way up to $1 million. So if you like the sound of that, consider subscribing to the channel. Check out what I've done already. And if you vibe with it, you can subscribe. I appreciate it. If you don't, you just keep it pushing. Well, I appreciate everybody that takes the time out to check out the channel. Appreciate you guys. So in today's video, we are going to go over Tesla's Q3 2021 financial results. I'm wrapping things up here. This is going to be the final part to the Q3 2021 financial results for Tesla. I always love to bring this earnings call to you guys, break it into sections, because people don't listen to earnings calls. And I strongly believe that it's important to listen to earnings calls, especially of companies that your favorite company that, you have high conviction of. And, it's just important to listen to earnings call. If you have, S&P 500, you cannot listen to 500 earnings call. But I'm sure there's those big companies that you're very convinced that they're going to be bigger than they are right now. So you should listen to those people's earnings call. And that's what I do with Tesla. I strongly believe Tesla is one of those companies where it would be bigger than it is right now based on all the things that they're doing. The company, I believe they're going to be worth trillions, multiple trillions, not one, not two, not three. They're going to be worth a lot more 15, 20 years from now based on the things that they're doing today. They have a great team, they have a great management team, they have great everything. They have a great vision. They have a great vision of how they see the world and what they are planning on doing to make that happen. Investing in something like Tesla, for me, this is my take. Investing in something like a Tesla is basically you're investing into Elon Musk's brain and businesses, because I low-key believe that engineers from SpaceX, from the Boring companies, all these companies, I'm sure they all work with Tesla. So by investing in Tesla, for me, this is my own opinion. I don't know. I'm just from an outsider looking in. For someone that do research on the company every day, I believe that investing in Tesla is low-key investing in all the other companies. So we gain a good bang for our buck. That's why I like to listen to the company's earnings call. Okay, so without taking too long, let's get right into the earnings call and see what we are going to get up to today. So this is the analyst questions. Analysts are asking Tesla questions. Okay, so let's get right into the call. We are going to finish. This is going to be the last part of this video until Q4, when we gain a little hints that Elon is going to be on the Q4 call talking about Cybertruck, and obviously it's the end of the year, so he wants to wrap up their mission for this year and talking about what the mission will be for next year and beyond. So that will be an exciting Q4. So let's get into this one right now and see what analysts have to say.
Very much. The next question comes from Joseph Spack from RBC.
Thanks. Can you hear me?
Yes, sir.
We can hear you.
Perfect. So Zach, as you noticed, or as you noted, you hit low teens operating margins. That was your medium-term target. You're there now, despite the number of challenges and not full utilization of some of the plans. So, how are you thinking about that target now? Does it allow you to either drive price down further to unlock more demand, invest in other initiatives, or does that target need to change? And in longer term, do you have an aspirational gross margin target as the mix of software and hardware changes?
Yeah, we've actually exceeded our long-term guidance on our operating margin target. So we're very pleased to see that. And as we look out over the next quarter and the next year, there's a number of puts and takes financially for the company. The launch of Austin and Berlin will have rampant efficiencies there. Sure. For some period of time until we get those factories up and running.
Sure.
And so that's likely to put some downward pressure on our margins as those factories ramp. Our goals are to ramp those as quickly as possible. But as Drew mentioned earlier, there are a number of unknown unknowns that we'll need to work through. We are kind of also in this uncertain environment with respect to cost structure. So we are seeing costs increase on the commodity side. We're getting feedback from our suppliers as we are seeing ourselves, the impact of labor shortage. And then logistics and expedite costs just continue to be a part of our story here. And it's uncertain how that will unfold.
Okay.
It's our hope that these things stabilize. Exactly when that happens is difficult to predict.
Sure.
And we have been adjusting pricing in line with those changes in cost. And so we'll see how that unfolds over the course of the next year.
Sure.
So it's difficult on gross margin to say where that will go, for those reasons. With respect to operating margin, we've been very focused as a company on managing our overhead expenses and operating expenses. And operating expenses as a percentage of revenue has been declining, and I expect that trend to continue to happen.
That is true.
And I think the net of all of this is hopefully that we continue to make progress on operating margin over the next 4 or 5 quarters.
Cool.
As we think kind of forward, the business up until this point has kind of largely been a hardware automotive business with a little bit of software on top of that. As full self-driving matures, as take rates increase, if we are to raise pricing on that, there's considerable upside both on gross margins and operating margin as that comes to light, as the business starts to become more of a mix of a hardware-based company and a software-based company. So, we feel optimistic about the journey, very optimistic about the journey as we look over into the long term. Just a little bit difficult over the next 4 to 5 quarters. We'll continue to update on earnings calls as we learn more information. There's just a lot of uncertainty in the world right now.
Sure. And it's understandable because, they have this new factory that's coming up, and the way you address all these things in your books is like, for example, all the money that they've paid to build the factory is its expense, and then on the other side, they now have to depreciate those assets over time, and then with all the other things that they have to do, it's going to take time. So I think those are like just the minor thing that this person is trying to talk about. But to be honest, in the grand scheme of things, I don't think it's going to be a problem. The amount of margins they make, either gross or net, is going to grow over time. That's what we know.
Thank you. Joe, do you have a follow-up question?
Yeah, the second question is just, you mentioned LFP packs globally for standard range models. My understanding is that all comes from China. Is that the continued go-forward plan, or do you want to develop LFP capabilities in other factories around the world?
Yeah, certainly our goal is to localize all key, parts of the vehicles on the continent, at least the continent, if not closer, to where the vehicles are produced. So that is our goal. We're working with, internally and with our suppliers to accomplish that goal.
Sure.
And not just at the end assembly level, but, as far upstream as possible.
Sure. Yeah, because that would be the main thing that makes sense for them to do. Have a factory in Europe, have a factory or 2 in Asia, maybe have one in India, have one in India producing like solar panel and all these things, because people don't really drive much in India, but they could do with like, solar panel, having electricity. So have that one going in India, have one more factory in China, have like 2 or 3 in America, then also have like a couple more in Europe. They're thinking about one in the UK, one is already up in Germany, maybe have another one again. So a lot of good stuff. The more they can localize those things, the better it is for the business in general, But all these things, it will always take time to work its way around anyways.
Thank you very much. And the next question comes from Colin Langham from Wells Fargo.
Come on, Wells Fargo, let's go.
Colin, are you able to unmute? Okay. While we're waiting for that, let's go to the next one.
Do you hear me now?
Sorry, yes, we can hear you now. Perfect.
Sorry about that. Okay. Yeah, just actually kind of following up on the question before. You'd mentioned commodities are rising, and when I look at a lot of the key raw materials in the battery, cobalt, nickel, lithium, all up 40%. And I know you guys have, done a good job of getting long-term contracts to sort of mitigate that impact. I mean, have you seen so far any impact from that spike? And if not, I mean, any sense of when that raw material headwind might actually show up or has shown up?
Yeah, we have seen
question.
an impact. Our primary exposure right now is around nickel and aluminum, nickel in the cell, aluminum and non-cell. And, we have a mixture of contracts with various suppliers. Some materials we contract directly and we have full exposure to price fluctuations. We do have a number of long-term commitments, long-term contracts in place. We also have contracts where there's some amount of cost sharing based upon the movement of indexes. And so, as these have been moving, some of those costs have been flowing through to us. It's not a substantial amount of cost, but it's not small. As we look towards the next year, I certainly hope it doesn't play out this way, but it's possible that we continue to see more of cost headwind as a result of these movements. It's difficult to say precisely, but the volatility and the increases are just substantial. And there are certain suppliers that maybe up to a certain point have been absorbing some of the increase. And as contracts expire there, or we have to renew and extend them, we'll have to return to negotiations. And so, what we have to do as a company and what we're intensely focused on is we need to be continuing to drive down the cost of our products, which we have been doing. And we have to overcome cost increases that are outside of our control.
Sure.
So whether that's resourcing components or redesigning components or finding ways to be more efficient in manufacturing, we have no choice but to continue on that path.
Because everything they do boils down to their mission, and the mission is to accelerate the world's transition to sustainable energy, which I think they are accomplishing it to some point, because after so many years, all these companies now, the best EV, they're the leader, even though they're not even out with any car that is tangible that people can use. aka Mary. Yeah, let's get back to it.
Be even more aggressive in the light of the macroeconomics here.
And diversification, right? Doesn't need to be nickel or cobalt, or there's always another option.
Okay, let's go to the next one. The next question comes from Colin Rush from Oppenheimer.
Hey guys, can you hear me okay?
Yes,
Yeah, we
sir.
can hear you.
Perfect. Can you talk a little bit about your strategy around anode materials and your ability to leverage that into reduction on the cathode side and performance from the LFP?
Sure. I don't know that I'm going to get into too many specifics, but I guess first, one thing I would say is, unlike the commodities discussion we just had, like the anode materials are not really in the same situation, just in terms of what their constituent components are.
Okay.
So there's less of a
bottleneck,
a focus on like rapidly changing them one way or the other, because they're generally stable commodities. There isn't exactly like a tit for tat where like get a better anode, use less cathode. Like there's a fundamental ratio that you need to maintain for the cell to function. So I guess zooming out, the primary focus on the anode side that we have is just ensuring that it doesn't in any way, that we are able to continue to reduce the cost of the anode without impeding on the long-term cyclability of the product. It can also help with energy density, as you like sort of improve the energy density of the anode, you improve the energy density of the cell, not directly one-to-one, because you have to pack more cathode in as the anode gets better. And that's a focus as well, but the trade space is just sort of cycling versus day one cost.
That's super helpful. And then just around the vehicle pricing strategy, obviously there's a lot of flexibility there for some customers and not. Can you just talk a little bit about the process around vehicle pricing and how quickly you expect to change that and adjust as you see some of these commodity prices flow through the cost structure and you look at the demand dynamics for vehicles?
I mean, Tesla has they've raised the prices up this year already. Like, the prices of the cars has gone up $5,000 to $7,000 on the average this year. So, I mean, if prices of things keep going up, they probably will raise it again, But I don't think that will still stop people from buying a car. So we'll see.
Yeah, pricing has been a really difficult thing for us over the last couple of quarters, and where part of the challenge is, the great thing that we're seeing in the space right now is there appears to just be quite a profound awakening of the desirability for electric vehicles.
Yep.
And I mean, to be totally frank, it's caught us a little bit off guard.
The demand is high. The demand for electric vehicle is high. And what do people do? What do people do when they hear electric vehicle? You hear Tesla. People refer to the car. It's a Tesla, bro. It's a Tesla. Who is saying it's a Mach E, bro? Nobody. So the demand is high, regarding the price. But at the same time, they can't just keep on raising the price just because they want to raise the price. If it's costing them more to buy the things to, get the car to you, you have to pay more. Because the demand is high. Look at Hertz. They just bought 100,000 of these things. Because the demand is high, they just don't mind paying it anyways.
And that kind of awakening and change in consumer sentiment, I'm sure there's lots of reasons that go into it, but folks want to buy an electric car and folks want to buy a Tesla right now.
Yep.
It's very exciting.
Not just any electric car. People want to buy Tesla because when you think electric and you think in the word electric and you have car next to it, it equals Tesla. If you do the math, electric plus car equals Tesla. That's what it is in the mind of people, So it is what it is.
For us, at the same time, we have installed capacity to build more cars, but we're constrained by a number of dynamics, as we've talked about in great detail.
Okay.
And we are putting in extreme effort to build as many cars as we possibly can.
Definitely, they are.
It's hard to overstate how extreme the efforts are. It's quite the grind. We're trying as hard as we can to maximize that capacity and to be able to meet the demand that we're receiving. But the net of all of this is that we're not able to increase production capacity fast enough.
Yep.
So, at the same time, we are seeing macroeconomic cost impacts on our structure, as we've discussed previously on the call. So we're trying to think through, if somebody orders a car now, it could be delivered in some cases, depending upon the car and which factory, could be a couple of months, could be a couple of quarters. And the timing in which we build that car will be just before that car gets delivered. And what will the world look like at that point? And so
look at that. A couple of months or a couple of quarters. A quarter is 3 months. A couple of months, so maybe 2 or 3 months. Or a couple of quarters, maybe 2-3 quarters for you to get your car. And a lot of people, they don't mind waiting because they know it's hard to get these cars. And once everything's settled in, supply chain settled in, everything settled in, then it will just be easier for people to get their hand on. But until then, people will just have to wait, and Tesla will be the one to have the pricing power.
We're trying to think through how the cost structure is evolving. How does pricing need to change with that? What are the supply dynamics in the space? The other thing that I'll just note on pricing is that companies change pricing all the time.
Mm-hmm.
The difference is that when Tesla changes pricing, it's extremely transparent, where that's not always the case otherwise.
Sure.
And sometimes our pricing will increase, sometimes our pricing will reduce.
Mm-hmm.
Sometimes to the public, our pricing changes may not seem to make logical sense. But there is a strategy that we work behind the scenes as we're balancing supply and demand,
Sure.
as we're also trying to balance various shortages on parts, as we're trying
Sure.
to manage wait times. All of that goes into the optimization here.
Sure. So that is it for this video. I hope you've enjoyed the video. If you like it, please consider subscribing. It helps me out, and I hope you enjoy what I do here. Check out what I do on the channel. If you're just running into me for the first time, this channel is focused on getting my money up to the first $1 million net worth assets, investment assets up to the first $1 million, and I'm going to show you guys the process. So I hope you've enjoyed this video. This Q3 Tesla financial result breakdown, it's in 5 parts. Okay, I'm gonna leave it in the cards. You can watch all the parts, so you can get an idea of what the company is doing. You get an idea of what I think, and I hope you've enjoyed it. So thank you very much. I appreciate the support. For those of you that support the channel, thank you very much. Until next time, see you later. Love you all. Bye.